Hi, this is Dave Bolduc with the Bella Group. Welcome to my weekly real estate market update. Today's May 27th. You may have noticed that last week I didn't post a video. Apologize for that. Got way in a rabbit hole on this particular topic that we're going to talk about today. And also I took several days with my dad, headed up to a friend's house. He has access to a cord, and my dad is a huge cord fan. So this video here you're seeing is actually my dad driving the cord, or actually he's riding in it, but he got to drive it later. It was a great trip, awesome time. But it did take away a little bit. So I apologize, but we'll get right into it now. So the topic is Wall Street's buying up all the houses. What's going on? So first, are they buying houses? Yes. Are they buying all of them? No. Is the data that's being thrown around accurate? Marginally, but really not. So we're going to dig into that. But first, let's talk about YouTube algorithm. We talk about it every time. Please like and subscribe. Ring the notification bell to get more content. And throw some comments down there. If you've got data that I'm not covering in this or any other topic, please throw it out there. I'm trying to learn. I'm trying to put information out there for everybody, and I appreciate it. So the next thing is about 700 new listings in the state over the last couple days. We're up to about 5,300 homes on the market, which is the first time been over 5,000 for a while. We were at 4,500 a couple weeks ago. And it's just, we're still well below that 20 to 30,000 we'd like to be at. So we're seeing a little bit of improvement, but not enough to really get excited yet. Hopefully that'll continue as the summer goes on. Talking about institutional investors owning property, I want to set a baseline. So I'm using the 2020 census numbers here. This is single family homes in the U.S. There's 84 million, according to the 2020 census. They're owner occupied 69 million. Rentals, 15 million. So that's our baseline. Those numbers will come into play in a minute here. Spent a lot of time trying to find some data as to how many houses, single-family houses, are actually owned by institutional investors. Found a couple of articles that both said it's about 300,000. I don't know when in 2021 that number came from. We're going to assume for this discussion that it was at the beginning of 2021. So 300,000 homes out of the 15 million that are rentals were owned by institutional investors, according to these two articles. This article here is kind of the lightning rod for everything that I've been seeing. Every article that I've read either references this article or references an article that references this article. And the farther out on that chain of references you get, the less accurate the information is, and the more speculative and the more, basically valueless the commentary is. So coming to this article itself, and you read through it, there's a lot of great information in there, but there's a lot of caveats. You have to be very careful how you use the information. This chart is one of the pieces of information that are in the article. You can see all the way on the right, those last three bars are really tall compared to everything else. Those are Q2, 3, and 4 of 2021. And that's the number of houses that were purchased in each quarter. So Q1 through Q4 of 2021, it adds up to about 306,000 homes. Remember that. Now, important points in those caveats I was talking about. This is the 40 out of the top 50 metro areas. It's not the entire United States. It's only the 40 out of the top 50 metro areas. Now, an institutional investor with a ton of money buying houses, are they going to buy one in this town, one in that town, one in another town, one in another state? No, they're going to buy them all in one general area. They're going to go to one of these top 50 areas or metropolitan areas and buy as many of the houses as they can so that they can hire one or two property managers and focus on that, and it's nice and simple. They're also going to be looking for lots of available houses, lots of available renters, lower taxes, better pricing, and landlord-friendly laws. So this study here really focuses on the target area for investors, so you're going to see a lot more investor activity in those areas. Couple other issues. Starting with that 300,000 that I said was at the beginning of 2021 from those two articles that I said, adding the 306,000 from that chart I just talked about, that's a little over 600,000 homes owned by institutional investors at the end of 2021. That's 4% of rentals, 4% of the 15 million. It's 0.7% of the 84 million all single-family homes. And for reference, in 2021, 8% or 6.9 million homes in total were sold out of the 84 million. So that 0.7%, it's less than 10%. It's a small, small number. Now, let's talk about what's the concern here. The concern is that the number of single-family homes that are available for owner-occupants is shrinking and the number of rentals is increasing. So I don't have that data right now. I need to continue to look for it and track it over time. But the data that they're presenting right now, I don't know that it really shows one way or the other. Because it just, the definition of investor in that article is anybody who bought a house not in their own personal name, in an LLC, an incorporation, a trust, whatever. That could include somebody who bought an LLC or a corporation but plans to live there themselves. That could include a family trust that bought a house for a family member to live in, and those aren't Wall Street investors. That value or that definition of investor also includes me. I own a couple of rental houses with my wife that we own in LLCs. So according to this definition, I'm part of Wall Street, which I'm not. I wish I was, but I'm not. So there's some flaws there. The other issue is they don't look at the seller. They just look at the buyer. See, my puppy's running around on here. Sorry. They don't look at the seller. They just look at the buyer. So if the seller was also an investor, then it doesn't impact the number of houses that are available for owner-occupants. What about houses that were foreclosed or were in terrible shape that a investor buys and then plans on selling? They don't look at that. And they also don't look at ways that the number of owner-occupant houses increases, which is landlords selling their house. I personally, as a broker, been involved in several deals like that where a multifamily or a single family that used to be rented out is being sold. There's my puppy. Because the landlord's tired of it, or just they want to cash in. So there's some real gaps in this data. And when they say 18.4% of all houses sold in Q4 went to Wall Street, no, not even close. Not even close. So some conclusions. There is some impact in those areas that fit the criteria I talked about, those metropolitan areas that are favorable for investors. The real reason for the shortage is a lack of building over the last 14 years. It has nothing to do with institutional investors buying up homes. If we get to the point where their institutional investors own too many homes, say they have 4, 5, 6 million homes or more that they're renting out, and then they realize, hey, home prices are kind of topped out. The stock market's pretty low, or some other investment's pretty low. Let's sell all these houses, take that money and move it over to real estate, or not real estate, move it over to the stock market and catch some increases there. That's where there could be a problem, especially real estate is very local. So if you've got a huge concentration of investor-owned homes in a particular metropolitan area and they decide to sell all of them, it could crash the market in that area. So that is something to watch out for. But as of right now, although it's an interesting thing to look at, it's a red herring. It has nothing to do with what's going on right now. And this is a quote from a Redfin agent in Phoenix, one of those metropolitan areas. As for the investors, it's not just corporations coming to Phoenix. It's individuals too. They realize they could buy 3 rental properties here for the price of 1 in San Francisco. It's a side hustle for some, a retirement plan for others. I think that kind of summarizes it. The vast majority of single-family home owners that are renting out houses are people that are small scale, 1, 2, 10, 15, not tens of thousands of rentals. Shifting over to the market, or the mortgage market survey, we're at 5.1, down from 5.25, so that's great. The speculation is that mortgage rates have priced in the expected future Fed increases. If that is the case, we can expect to stay in this range. Hopefully that is the case. Now, 5.1 is certainly higher than the 3% we've been at recently, but it's still much lower than you can see on this chart, the 8 to 12% from the 70s to the 90s. So just keep that in mind as you're out there looking. If you're looking to sell, now is a great time. If you're looking to buy, you can still buy. I've got a couple of new listings coming on. I've got several houses with buyers under contract, so it does happen. You have to be persistent. You have to go for it, but it is possible. So I hope you guys have a great weekend, and we will talk soon. Have a good one.